this thing. So do it after that only. Okay. So look at here. There is a question here which will be there. Case study which will be there in the exam, and you have to answer it. So exactly the same numbers will be changed. That's all. Now there is a company called Vector Food who are making basically Kramica biscuits and all. They came with an IPO in 2018. So they raised around 540 crores through public issue in the year 2019. It is one of the leading companies uh, in the premium bakery segment. Okay, blah blah blah. जूम कर दें. ओके, इसको यहाँ से जूम कर देते हैं. और आई जस्ट अब आ रहा है ना, या टेक्स्ट पढ़ा कर दूं बड़ा. इज इट ओके? ठीक है. सो नाउ दिस इज द कंपनी विच केम इन IPO. So details of the IPO are given to below. IPO date was 15th of December 2020, and it remained open for 3 days for 17th of December 2020. The face value of the share was 10 rupees per share. Price was, price band was 286 to 288. Okay. Now this was in 2000 what? 20. Okay. Around 20. Now tell me, the price band is hovering between 286 to 80, just 2 rupees difference, isn't it? But what the rule says now? The rule says the upper cap should be minimum 5%, okay? Maximum 20%, and the lower cap could be 5%. Yeah, absolutely right. Okay, but it is not meeting the requirement, but because it was the time before the amendment happened. Okay, so it is just giving you, 3 bids. 286, 287, 288. So that means people can bid at 286, 287, and 288. Okay, fine. Now, during the process, we have to find out whether this is rightly priced, is it overpriced, underpriced, or will you like to subscribe to this public offer? Is it good price? Okay, so we are going to understand that the valuation part also in this whole process. The lot size of 50. So people had to apply in the multiples of 50 shares. Issue type was book build. Now we'll come to know that this company was profitable. This was meeting all the norms, okay, which could entitle them to come with a fixed price also. If they have, thought, they would have put a fixed price and gone with a public issue. But they choose book build, where they thought of taking offers from the public. Okay, is that so? They had done a book build this thing issue where they invited offers bidding at 286, 287, 288. So these are the 3 prices which are given to them because the tick size was 1. That means for every interval of 1 rupee, anybody can make an offer. Okay. So some additional information is given. The company has not changed its name in the last 1 year, because if it changes, then 50% of turnover should come from the new name. Then there is no outstanding convertible debentures. So if they are convertible debentures, then they have to first complete them, offer them, and then they can go for an issue. So there were no convertible debentures, which are ongoing convertible debentures, which are remaining to be converted into shares. So if the company has some convertible debentures, if the shares have to be issued to someone in lieu of the debentures, then the company cannot go for an IPO. So they didn't have any. Okay. So they're meeting the 2 criteria. Yeah. If the company's name gets changed, then company has to ensure that in the last 1 year, at least 50% of the turnover should come from the new name. Okay, if suppose the company changes the name today and goes for the IPO next day, they can't do that. Okay, at least 50% of the turnover, if suppose they are making a turnover 100 crores, then at least 50 crores should be from the new name. Because, people will not know, because the company name has changed from new, the business has changed. So the new company with new name, or whatever the reason, they can't come with an IPO. Okay, now what I did then, I went to the screener and pulled out some data about the company. So I pulled up the data regarding, the company's sales, the expenses, operating profit. Okay. So I found the company was, in an operating profit in all the years prior to the issue. Okay. So company should have at least 15 crores of, on an average, operating profit. So it is meeting the criteria, isn't it? Companies making huge operating profits. These figures are all in crores. So a turnover of 559 crores, expense of 494. So operating profit is 64 crores. Okay. So company is doing fine. Company is making operating profit. So one of the criteria is company should be making 15 crores on an average operating profit. Okay. Now, this I'm telling you, this is a solution actually being told to you at the same time as the question is progressing. Then company's share capital is given and reserves are given. Okay. If we just add them, we get the net worth. It is equivalent to the figure like all the assets minus the liabilities. If you want to calculate the net worth, it can be calculated in two ways. One, by simply looking at the share capital and reserves, add them up, it becomes the net worth. Okay. Or we say all the assets of the company minus all the liabilities excluding the share capital and reserve, because the balance sheet debit side, credit side is equal. So all the assets minus liabilities will also be your net worth. Why I'm saying? Because there's a use here. Now there were no intangible assets of the company. I've seen the balance sheet, there's zero intangible assets. So if you minus this, you get net tangible assets. There's nothing but all the assets of the company and all the intangible assets. If you remove it, it will become it will equivalent to net tangible assets, isn't it? If I've taken all the assets minus the liabilities, and then I would have come to a number, and then minus this net tangible assets, so I would have not. So this is another method of calculating net tangible asset. Is that okay? Okay. Now, the bank balance, what are the receivables? So I calculated that and then calculated percentage of monetary asset. But in your exam, this will be not there. So you have to calculate that. Okay, so I'm just putting. There will be monetary assets will be given to you. Percentage you have to calculate. This is a simple thing. So I'm not taxing you so much. Otherwise, I will give detail of monetary assets. So you put them and calculate the percentage. So one step reduce. So you will have to just see. Company should have at least. So what's the rule, Nandini? Not more than. In regard to monetary assets. In each of the 3 years. Okay. Fine. Or the monetary assets should not be less than, at least in the last year also, it should not be less than, because if the monetary assets are more than 50%, then what is the problem? Then the company has to first have to buy fixed assets and reduce their monetary assets below 50%. Okay. Here, the company doesn't have to. Just let me complete. Here, since the company just before the IPO were meeting the limit. Okay. Fine. Yeah. Monetary assets are. Monetary assets are basically, monetary assets not all current assets, it's all assets which are equivalent to cash. Like cash in bank balance, receivables, they can be converted. All the receivables which are being realized, there are no bad debts out of that, so you can convert them into cash. Okay. Or a fixed deposit if you've done, or some investment somewhere which you can always, sell them and get the money. Okay. So the SEBI has given, classification of maybe monetary assets, or it's coming relying on the Institute of Chartered Accountants definition of monetary assets, whatever may be. Okay. So since the monetary assets are given to you, you don't have to bother. You don't have to calculate that. Okay. It should not be more than, it's 50% in the last year. So it is not more than 50%, isn't it? अगर नहीं है, अगर ये 52% होता, then your response would be the company has to first reduce it to 50% by putting all that money in fixed assets. So in your final exam, maybe I will be giving monetary assets more than 50%. Then the question will say what they are supposed to do. First, they have to bring down the monetary assets at around 40%. That should be the response. Make a firm commitment. So that means you say that they have to make a firm commitment in the offer document that they're going to bring it down before the offer opens. अगर ऑफर ओपन होगा उससे पहले कर बस तो वही आप लोगों दे हैव टू मेक अ जो लिखा हुआ है सभी में वही लगा दो दे हैव टू मेक अ फर्म commitment to bring it down to 50%. But here, since it is all 50%, so there is the answer will be that they are meeting all the requirements. But in case if it is not 50%, then you say that they have to make a firm commitment to bring it down to below 50%. Is that okay? By if you have monetary assets, now what happens is like suppose a company wants to bring in an IPO, okay, and a company wants to increase their net tangible assets. So promoters can give some lot of money from their personal account and put it into the bank account of the company. So this will increase the net tangible assets of the company, isn't it? So it will meet the criteria. But monetary assets will also go up. So somewhere they have to be caught up that they are not doing any kind of activity where they're trying to boost up that net tangible asset by bringing some cash, and they can withdraw that cash immediately after the IPO is over. So you can always boost up the net tangible assets if you want, the promoters and the owners can bring a lot of cash into the into the business, which will boost up the net tangible asset, but not the monetary asset will also go up above 50%. Isn't the chances are like that? So the monetary assets have to be below 50%. So that means it is not kind of, they have not done some kind of a hanky panky kind of a thing to make it to above 50%. If they've done it, so they have to put in a fixed asset. They have to buy plant and equipment and machine. The money should be, the idea of the, the SEBI is that, all the money which the company is having, that should be running into assets and not into cash. Then the company is good. Otherwise, if they're putting all the money in cash, if they are 80% money is in cash, the IPOs can, the promoters can withdraw cash and run away if they're allowed to do with an IPO. If they put substantial money in fixed assets, that's, already, in the business. So it's more difficult for people to manipulate that and, wound up the company after the IPO. They will remain in the company, they will remain in the business. So there's a firm commitment, the company is in that business. Okay, is that okay? Okay, I just prepared, what I was thinking, I was searching for a case study. I couldn't find any. So I thought, okay, I'll make mine. So please help me in this whole process. If you find something which is not gelling out, so tell me, okay? Because this is the case study made by me itself, okay? So I can make some errors, a human error. So just look at that. So far, so it's okay. इसमें कोई प्रॉब्लम दिख नहीं है, आगे जाएंगे तब देखेंगे. Okay, fine. हाँ, you want to ask?
So I think the first question yesterday, and basically all the things that need to be met, like all the requirements are not mentioned.
हाँ.
So for some requirements it's not mentioned.
हाँ हाँ अभी आ रहे हैं वो आएगा, जो क्वेश्चन आएगा ना तो उसमें होगा कि व्हाट ऑल आईपीओ रिक्वायरमेंट. सो व्हाट एवर देयर यू से दे आर. हाँ, इसमें क्या देखो, फर्स्ट ऑप्शन वाज द नेम हैज नॉट चेंज. देयर आर फोर प्रॉफिट नॉर्म ऑप्शन. ऑपरेटिंग एसेट्स, okay, net tangible assets, and your net worth. So four things, there were four things. There are four things if you look at. One was the name should not be changed. So name wala ho gaya. Then the operating profit should be above 3 crores. It's meeting out. Third one, that the company's net worth should be more than 1 crore. We'll check out that. Then the monetary assets should be below 50%. Okay. And then net tangible assets should be, more than 3 crores. Remember that? हाँ, उसके अलावा the promoter should not be, caught in some kind of legal this thing. The SEBI should not depart. हाँ, वो आपको लिखने पड़ेंगे वहाँ. अभी क्वेश्चन जो होगा उसमें होगा what all other requirement do you think the company needs to maintain? So you say you will check whether the promoter has not been debarred or the promoter's subsidiary companies are not debarred. Fine. Or they have not been declared a fugitive economic offender, or they are not willful defaulter. So there are certain conditions. Okay. Only the eligible requirements are very important for you to remember. Isn't okay? जो शुरू की there were 6-7 requirements you should always remember while you're coming for the exam. At least वो तो आपको पता होना चाहिए. ये क्वेश्चन तभी सॉल्व कर पाओगे. Okay, fine. Now, basis for offer. When you go to the offer document, so please listen here very carefully. All the online guys are there. Tejal, are you there? Okay. So basis for offer. Now, when you look at basically, the prospectus of the company, fine, which is, red herring prospectus in case it is a book, this thing. So they'll contain a clause called basis for offer. That means how they have arrived, or what is the basis for putting a price band. Okay. So they say that this is the EPS number which is given to you, earning per share. Now, earning per share can be also calculated because the companies, if I give you all the numbers, you can calculate that, but I'm not telling you to calculate that. Okay. The numbers are given to you. So the 3 years prior to the IPO numbers are given, and even the diluted EPS is given. And diluted EPS is basically, if suppose you have some convertible debentures, okay, or some ESOPs, if they are converted today, then the company has to issue more shares. So you have to add and calculate, recalculate the EPS. Okay. Why so? Because because the EPS, if it goes down, okay, here the EPS is going down because of, there is some diluted EPS here, because there are some people who have been issued, some instrument which are going to get converted into shares on happening of an event. Okay. Now assume that event has happened and convert those into shares and increase the number of the shares of the company and recalculate the EPS of the company. Is that okay? Fine. Which you don't have to do. It will be given in an exam. Fine. Why it is done? Because it will actually, when you calculate the diluted EPS, then the P ratio, because when you look at the P ratio is the market price per share for the EPS. If the EPS goes down, then the P ratio goes up. Then the share becomes more costlier, isn't it? So if the share is becoming more costly because there are no more number of dilution going to happen, then the investor should be aware of that. Because if all the diluted shares are going to be issued, then the share may look to be more expensive compared to what it is looking now. Is that okay? Fine. ये बात समझ में आ गई आपको? Okay. Now, the figure which is kept in yellow needs to be filled up by you. What you have to do? Weight. These are standard weights, 3, 2, 1. The last third year will be given a weight of, the latest weight will be 3, and mid rate will be 2, and then 1. So even 3, 2, 1 will be blanked. It will be marked yellow. I will not mark it yellow, so you have to assume weight of 3, 2, 1 and calculate the weighted average price of the EPS. Okay? Is that fine? So this companies are supposed to give this in their offer document. Now, coming to, and there is an Excel sheet which I'm attached where I put the formula, so you can look at the formulas and do it. And if Excel sheets are allowed, you can do it, straight away on an Excel sheet you want. Okay. So there's an Excel sheet where I've actually solved it. Okay. Fine.
So you could make it a take-home exam where we do it on that day only,
Ah.
and then we have the option of making it a handwritten and Excel.
Okay. So we'll discuss that. Fine. Then P ratio at the floor price and P ratio at the cap price. Now, since this company was not listed on the stock exchange prior to coming because of the IPO, so we have to calculate the P ratio based on the offer price. Okay, so this price is 268 lower band and 288 upper band. Okay, so you take that price and divide by the EPS, you will get these numbers, both on the basis of diluted EPS as well as the basic EPS. Look at the number here. These numbers will be kept blank, so you can just simply calculate that. Okay. Take, for example, the price of 286, okay, and 288. 286 is the floor. So 286 divided by 5.63. Do that. So if you take 286 as the cap price and divide it by weighted average of 5.63, what is the price? What is the P ratio you're getting? Huh? 286 divided by 5.63. Huh? 80 आ रहा कुछ?
50.79.
Okay, just I'll check. Okay, so first, this one, P ratio, okay, P ratio, D3, okay, D3 divided by, so this is the 86, okay, and this is your divided by EPS. So वही तो करा हुआ है, 286 and 288 है ना, it's coming to 583, okay. So I've taken this EPS of how much? P ratio. Based on the EPS of financial year 2020. Okay, fine. So ये 20 के basis पे. So take this number and divide this by the EPS of 2020 basic. So you get 53.86. So you are getting all the numbers. So you take the basic EPS of 2020. Okay, so that is what you are supposed to do. So it is giving you 53. Okay, isn't it? Going back here.
So we don't bother about diluted.
Tentative है.
We don't bother about diluted.
we don't. नीचे diluted तो दिया ना, diluted दोनों का निकालना है आपको. So I just shown you one. You can do it for that also. Fine. So weighted average EPS को नहीं लेना आपने. You have to take the EPS based on 2020 and calculate what would be the P ratio, the current P ratio based on the current EPS, isn't it? तो कितना आ रहा है आपका 53 आ रहा है और 54 आ रहा है हायर कैप पे और 53.96 if you use that diluted, so you find the P ratio is going up, isn't it? And diluted बहुत ज़्यादा होता है तो और बढ़ जाती है. So share would look more expensive, isn't it? At P ratio, lower the P ratio, less is expensive. Now it is given what is the peer group P ratio. Now a company like Nestle, which the two numbers have to be given, okay, highest and the lowest. So Nestle is a company which is the peer group. which is trading at 86.4 P ratio. Whereas the lowest, which is called the Pratap Snacks Limited, nobody knows about them. They are trading at 32 point. Maybe that we are eating their biscuits and all. We don't know about that. Maybe you are having a cheese roll of this company. No, I'm just joking. Okay. So 32.5. And I'm not saying that it was not good. It was good. It was made by Nestle. Okay. Fine. So 32. So industry's P ratio overall is 63. So that means this industry trades generally, industry P ratio is 63. And what is the P ratio of your company coming to? 53. So tell me, is this company expensive? No, because if you look at the industry P ratio, from that point of view, may look to be not expensive. Fine. If now it will all depend upon the growth as well as the risk of the company. Okay, if the company is very risky, if the growths are not much, then even this may look to be very expensive. Okay, rider is when you're comparing with the industry, you are just making a peripheral kind of a judgment that this company is looks to be good. Fine. This is reasonably priced based on assuming that all the companies have same growth and risk. So here the writer is, you have to write this also. Okay, remember that this company is okay, but with the assumption that the company is having, these are all similar companies having the same profit, same growth, and same risk factors. दोनों का सब कंपनीज एक जैसी रिस्की हैं और एक जैसी ग्रोथ हो रही है. All the companies are growing at 20%. All the companies have beta 1. Then it's fine. Is that okay? अगर सारी कंपनी इसमें they are, but this is very highly unlikely, isn't it? But as you say that assuming that company has similar growth rates and similar risk, I mean this thing, they are similar risky, then this company is reasonably priced and you would like to put your money. But in real life, if you want to do real analysis, then put the growth and the beta. जो आपने exercise करी है, जो you know all these you are doing an exercise with regard to one. So you put the growth number and put the beta and then check out whether the valuation, whether the peg ratio, if the company with the lowest peg ratio should be. But the SEBI has not gone far beyond saying that project the growth and put the risk. So they can't. I mean, they can't be. They can't be. I mean, even that may be sometimes not be the conclusive one. Okay. Because so they have just left it that you give this, at least beyond this the judgment of the people will apply, and people don't know the growth and risk can make things wonders for the company. Okay, so लोगों को इतना तो पता नहीं होता, but at least तो ये तो पता चल जाएगा कि this company is trading at a lower P multiple than, if they are listed they'll be trading at a lower P multiple than what the others are being traded at, isn't it? If the share price remains the same after the IPO is over. Okay, so whatever the price they are offering, if suppose the share price comes to like this on the listing day, then the P ratio would like this, look like this, which is lower than the industry composite. Is it okay? यहाँ तो कोई प्रॉब्लम नहीं है. अच्छा, अब now return on net worth. Again, this figure has been kept as yellow. Okay. Now again, one condition was net worth. The company should have more than how much net worth? 1 crore. Okay. And net worth we have seen, by the way, net worth is already so many in crores. Okay. So that even that is, so return on net worth is nothing but return on equity. And return on equity means the profit of the company, okay, divided by the share capital. Okay. So let's see वो numbers हैं आपके पास, because I have not given the net profit of the company. That's the only problem out here. So I'll go here. So return on net worth. So that means company's net worth needs to be, net profit should be given to you, which is not part of the question. So that was a missing number. Okay. But I'm asking you to calculate return on net worth, but net profit I haven't given you in the question. So the net profit will be given to you. So assuming the net profit is this, which is the actual number taken from the balance sheet of this company. Okay. And the capital and reserves are already provided in this thing. So then we calculate ROE. ROE is nothing but return on net worth. So you take this number, like suppose you want to calculate this. So you just take the net profit and divide it by the net worth. So it gives you 13.46%. So that means this profit number should be given to you. So I'm just putting straight away, and I'll make an amendment myself later on because I should remember this. So now I put the net profit here. Okay, fine. So this will part of the exam. Net profit of the company will be given. Okay, so I'll put it appropriately later on. So if this is given, then you need to calculate the. Now look at this table. So it says net worth of 1, 2, 3, and this is the average. Again, multiplied by 3, 2, 1, you get the average. Okay, and the 6 month period, 19.6% will be given to you. You don't bother about that. Okay, fine. So rest you don't have to calculate anywhere. Now look at the questions. What will be there? Look at the questions you have to answer. What is the whether the eligibility requirement of an initial public offer has been met by the company or not? Take a comment on that. So what you can do is you can mention all the conditions and say yes, met, yes, no, or you say that we don't have that answer in the question, so we need this. The promoters are not debarred from. So you have to make sure that the promoters are not debarred from coming. So that is.
For this question, since we know that the price range is not correct, we cannot even say that is.
But this the year is mentioned, so year is mentioned. So at that time, this price cap was acceptable. There was no minimum cap at that time. Okay? So at the time of the issue, because since the cap was it was not mandated to have at least a minimum lower cap of 105% of the floor price. Okay, fine. So that is not. What other requirement of the and a question में इतना लगा. Second question I will take it off because the first question you have to mention everything. The company having the intangible assets, ये वो plan and plan, and all of things you have to fine. So you can write all the conditions and just put the company has met. Yes. Company has not met. You say I mean you need further information to check. That will be your company. So you may see regarding when you then you will use the company's reasonably priced because the pricing is okay because the composite P ratio is composite P ratio of the industry. But like I assume we are looking at the risk and civil prospects. Right, you will just end up instead of writing so many things, one big investment analysis. See, problem mentioned this. I think we will obviously do it. So that risk of all marks. Come under the issue, okay? So you can complete the. So what will be the offer allocation in each category? Fine. Last is now if you look at the category here, section rule 3241. Okay, so we can just simply go there. Public issue. Though I've already given, how much they have given to retail investors. So there's one, Excel sheet talks about that. But since this is a company which has met out all the norms, so it is not going to give 75% all to the QIB, isn't it? It's not, I mean, in that requirement category. So let's check out. So last one, okay. कहाँ पर है? Yeah. So this is first one where the company is not profitable. Company is not meeting out the norms. In an issue made through book building process under section rule 1 of the regulation. Sorry, this is what? This is under this clause the company is coming. Rule in the regulation number 1. Okay, so this is applicable if the company is coming with a book built issue and it's meeting all the norms. So this one, not less than 35% to the individual investors. Okay, and not more than 50% to the QIBs. Okay, let's check what they have done. Okay, let's see before we just move out. Look at this. Okay, how much they offer to retail investors? 50%. 50% is been offered to retail investors. Okay, and 21% to QIBs. Okay, and 29% to QIBs. This is what they have done actually. Okay, and the rule says what? Just check whether it is in line with this regulation. Not more than 50. Not less than 35% to retail investors, like almost like 50% to investors. Fine. So your answer should be this, isn't it? You have to answer in that they can give not less than 35% to retail investors, not less than 15% to non-institutional investors, not more than 50%. But that's all. So that's it.
The third question, comment on the issue price. Own multiples, right?
No, no. The multiples which are given to you now, of course, as an individual investor, so you would like to, do it yourself because you are more informed. So you can just make your own multiples, those multiples, they can do it and do the complete valuation. But whatever is given to you in the question, you have to just on basis on that. But you can say that you always, use other multiples which are more reliable than P ratio, like EV to EBITDA, price to sales. So you like to explore them also, also before, taking a call on the valuation. So you can always mention that.
To calculate the growth, we need
The future growth, future EPS of the company. Okay.
and
So
that will be given to us.
no, this is not given to you, so you don't have to do that. Fine. So you don't have to do that. So let's just quickly do the. Just check out who are all present. SNU. Okay, do one thing. Just write down the names of all the students on a piece of paper. Huh? Huh? There's some problem in logging. So what I'll do, I'll give attendance to all. I think how many students are there present on the online?
33 total, so it should be there.
कितने सब मिला के कितने हैं? सबको तो देना ठीक नहीं क्योंकि I think there are a lot of students and there are many students who are not present. 41 आ रहे हैं and the class is around 60, 55. So what should the call we should take? Should I try once more? Oh, sorry. It will work. I have to put this. I was putting my own. Okay, now it will work. Okay. So present all first of all. Aditya Mohan is there. Okay. What about Kunal Dhingra? Pranav Sharma? प्रणय नहीं है ना? नहीं है. प्रणव नहीं है. Okay. What about this Rasgulla? Sorry, Rohanshu. Rohanshu. But you're not from Bengal, huh? Okay. Rohanshu is there. Romit? है. Saurabh? है. Shruti? Tejal? Shruti Tejal are there? Shruti is not there? Tejal है. Vishaka है? हाँ तुम तो वहाँ हो. Okay, ठीक है. यशस्वी? यशस्वी? Okay. Nikhil? है? Not there. Okay. Abhirami? Not there. Aditi? There. Agnibo? Sorry. Agnibo Das. Okay. Anuruddh? है. Anya Kalra is there, I think. Then Aryan Agarwal है. Aryan Gulati? No. Okay. Aryan Madan? है. Ashish? Yes. Okay. Devesh? Present. Okay. Diya Gupta? No. Fareen Jeba? है? Okay. आप तो यहीं पर ही. Okay. Harnam Chabra? No. Harshika Grewal? Yes. Jay Bhatia? So Jay Bhatia is there. Okay. And Vishal Reddy? एक सेकंड से पीछे का निकल गया था. Okay. Vishal Reddy is no. Yuvraj Jain? Ayan Ghosh? Ishan Sharma is there. Okay. Anika Handa? Pranava Handa? Yes. Varun Madhavan? Yes. I can. Yash? No? You are there. Okay. Shreya, आप यहीं पर ही हैं. Okay. And what about Shreya Mehra? She was there. Okay. Nandini Bhatia is not there. आप ही हैं. अच्छा ठीक है. Abhinav Singhal? No. You're not Bhatlia Patala. Okay. हाँ Bhatla. Sorry. Anjali Semwal? No? Okay. What about Anush Krit Maurya? There. Okay. Aryaman Gupta? Aryaman Gupta not there? Okay. Haridarshini? Absent. Jayant Sankar? Absent. Raghavendra Singh? Absent. Raghavendra Singh is present? Okay. Tejaswini Satish? Okay. What about Anusha Garg? Yes, she's there. Okay. Darsh Oswal? Oswal is there. Abir is there. Suchita is there. कहाँ पर है Suchita? Okay, you're there. Okay. I can't see you. Siddharth Shah? Okay. And what about Akshit Arya? No. Chalo. So there was some kind of a good thing that we got full attendance of 48. ठीक है. हाँ? Missed or something? What was that? Missed some names. Okay. What were they? So just put it on a WhatsApp group, okay? And just send me. Otherwise, I put them present, okay? I have not marked them absent. So if your attendance, you can just write, I'm present. I'll just see, okay? Anybody's name I have missed, so just, tell me, because if I have missed, that means I have not marked them absent, okay? I also know that I have missed some, this thing, because I just opened it, so I thought, let me just